Hello, fellow Bitcoin enthusiasts. How's everything going? Yeah, all right, great stuff. Great stuff, everybody. So much wonderful content. Do you agree, guys? Wow, great stuff. And so today, we're here with these wonderful high IQ individuals who are at the forefront of two of the most successful Bitcoin treasury companies, probably the two most successful Bitcoin treasury companies thus far in Europe, no doubt, right? So SmarterWeb was the biggest IPO in UK history in over 425 years of British capital markets, correct?
That's correct.
Ah, wonderful. And Capital B currently has the most Bitcoin of any European listed company, correct?
Correct, and we were the first one.
Very nice. So everybody's super high on their own supply right now, and the coin is pumped, and we got a lot of coin, and it's excellent. But we want to talk about what is the how this all might end up, you know, at the end of this cycle, at the end of next cycle, at the end of the next decade, and maybe even beyond. So I think the most basic question to start with that is, what do you see from an investor's perspective as the biggest risk when you're investing in Bitcoin treasury companies? Of course, when you're investing in Bitcoin treasury companies, there's a lot of angles of order, but for the most part, especially people in this audience, they're trying to get, you know, more Bitcoin, right? You could buy Bitcoin and put it in your shoebox or under your mattress or whatever, but you invest in the treasury company so you can have more Bitcoin, right? Because you guys and the Bitcoin treasury companies, they have cheaper cost of capital, they have more access to more financial tools. I mean, companies in almost every single regulatory jurisdiction on earth have advantageous positioning to individuals for accessing capital and financial instruments, correct? So that's why the bull case, I suppose, of why an investor would want to invest in a Bitcoin treasury company, in addition to, maybe not in lieu of completely, in addition to their personal Bitcoin stash. But what should investors be looking for to watch out for from, as these, you know, every single day we see what half dozen new announcements, new entrants into the market?
Hey, look, yesterday I met an investor and he told me, you, on panels, you always talk about the bullish case for Bitcoin and Bitcoin treasury companies. And he asked me to potentially address some of the concerns of investors and what are the risks. So I would say in terms of what investors are expecting, they are expecting a management of risk as well and the perspective on the long-term perspective of Bitcoin treasury companies. And I would like to say first that the riskiest option for investors is to not get enough Bitcoin exposure. The riskiest option and the risk that investors look at is how to get rid of fiat that is getting completely debased. And then they look at different options that they have to do so. And they have Bitcoin itself for a very specific portion of investors because it's a commodity. And 90% of capital in the world is going to be allocated to securities. And the goal of a Bitcoin treasury company is to securitize Bitcoin and to provide a form of Bitcoin exposure that is accessible into traditional brokerage accounts and for credit markets and for traditional institutions that are looking for equity. And so then the risk of Bitcoin treasury company is to have, of course, a form of higher volatility than Bitcoin itself. But if you know Bitcoin, you understand that volatility is vitality and volatility is also opportunity. And so if a Bitcoin treasury company is more volatile than Bitcoin, but is purely based on Bitcoin and Bitcoin accumulation, and it's forming a Bitcoin accumulation machine on capital markets, then yes, there might be more downside risk as an investor, but yes, there can also be more upside potential if you have a sufficiently long time horizon. And I think that both SmarterWeb and Capital B, we are providing this type of options to investors with different type of risk appetite and different type of financial instruments that can provide access to Bitcoin in a way that can outperform Bitcoin over time with more volatility in the short term?
Yeah, I think the biggest risk for investors is execution. And so, you know, if you're investing in a Bitcoin treasury company, you're typically paying a premium upfront versus the Bitcoin exposure that you're acquiring with that investment. And what you're investing in is the expectation of a continuation of Bitcoin yield into the future, of adding Bitcoin per share going forward into the future. And that's the flywheel. That's the Bitcoin treasury company flywheel that you're hoping is going to continue into the future. And that execution risk is the biggest risk there of perhaps the flywheel never getting started at all. Or perhaps the flywheel losing steam and stopping, and you don't return the investment, the premium that you've paid up front for that. So that's why I think that we don't talk enough about how there's, now there's 200 Bitcoin treasury companies in the world, and a lot of them will never get the flywheel going. A lot of them will struggle to get off the ground and perhaps never really deliver that value back to investors. So I think that it's helpful to think about what's the track record of execution, and is this company de-risked enough to justify paying a premium up front because you can have some reasonable expectation of a continuation of the same activities to generate Bitcoin yield into the future.
And so in the ICO wave, 2017, there's how many scams? Infinite scams. So many scams. I can't even remember all the scams, but thousands. And in the last cycle, we had FTX, we had BlockFi, and Celsius, and 3 Arrows, and a lot of other scams. What's his name? Terra Luna, a whole bunch of garbage that imploded, and in hindsight, you could say, oh, we could see it coming because of X, Y, Z or whatever. What are people going to say in hindsight? What is the big scam implosion going to be in this space? And then what are people going to say afterwards to seem smart, where they say, oh, I saw it all along. I did this and this. I never even invested in that company. They came to me super early. I never invested because I knew.
Yeah, because this is the Bitcoin conference, I will go out on a limb here and say that in hindsight, it will be very obvious that treasury companies not built on Bitcoin were a mistake. I think that they will get into trouble just because you're building your foundation on sand, on quicksand, instead of on the bedrock of Bitcoin and the very real economics there. I think the other thing where people will get into trouble is debt and getting over leveraged, and in any drawdown, those companies can get into trouble pretty quickly. So people who get out over their skis in terms of how they're raising capital with debt could get into trouble. And then there's also other companies whose approach to growing their Bitcoin treasury involves taking shortcuts or raising capital at deep discounts to institutional investors, and not really treating the flywheel with respect, I think. And those flywheels may stall out as a result of approaches to raising capital. So there's a lot of ways where you can do it wrong. And I think we have a lot of respect for Capital B and how they've approached their Bitcoin treasury flywheel. And I think that investors should take care to pay attention to.
And from the investor perspective, for taking care, what's the biggest red flag, or what's the warning sign? The number 1, 2, and 3 warning signs that retail investors should be looking for.
look, if you want free flags, I would say that you can put free filters to separate the noise from the signal. And the first one, as Jesse mentioned, is this company focused on Bitcoin? Because Bitcoin is the only asset on Earth that has absolute scarcity, that is protected by the most decentralized and secure network in the world, bounded by real-world energy, the equivalent of 21 nuclear reactors around the world, protecting the value of your time and work over time and space. That's quite unique, and it's the first time in humanity that you have this unique information that this asset is working for you over time. And this network is powering you, your family, your corporation, your institution. And so if you are focusing on any other asset than Bitcoin for your treasury, then your company is going to zero. And it's going to zero against Bitcoin, and you are not going to be able to keep up against the other companies that have realized that they need Bitcoin on the balance sheet. It's like having a competition between the dollar and the Zimbabwe dollar. Well, you would want to, if you had the option between those two currencies, you would put everything on the dollar. But now you have the option with Bitcoin, and Bitcoin has a fixed supply, while the dollar has an unlimited supply. So where do you want to store your energy? Where do you want to store the value of your treasury? You want to store it in Bitcoin. So if you have not a focus on Bitcoin as a treasury, you are going to lose, and you are going to do a disservice to your shareholder base. So anything other than Bitcoin, any type of diversification, is losing value against a Bitcoin treasury company. The second filter is the focus on the long-term accumulation of Bitcoin, and specifically all in on the long-term accumulation of Bitcoin. Is the company fully committed on a Bitcoin standard to putting all of its long-term capital to Bitcoin on its balance sheet? That's the case for Smarter Web, that's the case for Capital B, that is the playbook of strategy that has initiated the playbook, and Metaplanet, of course, and we have continued this with Capital B and Smarter Web. And I would say that this is the second principle, and it's extremely important because it guides from an ethical perspective what will be the role of the Bitcoin treasury company in capital markets. Because when you raise capital, you need to be a Bitcoin maximalist to negotiate terms with financial institutions that protect your retail investment base and that are extremely accretive over time, not to make a quick buck, not to make a quick pump and dump scheme and then lose the capital over time of your shareholder base. So I think that's an extremely important component. And the third filter is whether or not the company is completely committed to have a Bitcoin treasury company strategy like Metaplanet, Capital B, Smarter Web, by being completely focused on maximizing the number of Bitcoin per share. And if you own a business and this business is not increasing the number of Bitcoin per share over time, this business is going to zero against the business that is maximizing the number of Bitcoin per share over time. That is my only role in the company. It is to raise capital, to maximize the number of Bitcoin per share by accumulating Bitcoin in a consistent manner, and to do the capital raise in an accretive way that is at premiums to the Bitcoin we have on the balance sheet, to be able to maximize that potential return over time for investors that believe in Bitcoin. And if you apply those three filters, you really end up with a hand of companies in the world today. And that provides a lot of clarity and a lot of peace of mind. And at the end of the day, when we talk to major investors, what we are able to do as a completely focused Bitcoin treasury company is to provide peace of mind for investors that know that they have a team that is dedicated to buying more Bitcoin for them over time, and that is extremely powerful to take advantage of capital market, the elasticity of capital market to acquire the most inelastic asset on earth, which is Bitcoin.
Yeah, I would add that on your third point there, that there's kind of an obvious thing that we don't talk enough about of there are some companies that are Bitcoin treasury companies focused on Bitcoin yield, and then there's other companies who are saying they're Bitcoin treasury companies who are really just adding Bitcoin to their treasury, and they're not committing to the Bitcoin yield side of this, the shareholder mandate of focusing your time and energy and all your capital on increasing Bitcoin per share. For example, like Tesla has Bitcoin on its balance sheet. That's just part of their Bitcoin of their treasury strategy in general, but they're not a Bitcoin treasury company. I think the vast majority of corporate adopters will end up being companies that have Bitcoin in their treasury, but they're not focused on increasing Bitcoin per share. So there really are there's a handful of companies in the world that are Bitcoin treasury companies focused on increasing Bitcoin per share who have a track record of doing that and have generated Bitcoin yield over time and have the infrastructure and everything that you'd expect in place to continue that into the future.
But that line's like not solid line, and it's going to be increasingly more blurry, no? I mean, so like right now, we're in this like initial mania phase of like Bitcoinizing the capital markets, and so we've raised like a lot, like my firm personally, we've raised a lot of money this year for these plays, and so thus far, right now, people almost don't want like actual business. It's like, oh, even if you have a business that's generating revenue, they say, oh, I'm not in this to, or I mean, the mindset is like, oh, I'm not in this to fund XYZ business. I'm not here to fund a printing company, or I'm not here to, we want to buy Bitcoin. And, but if Bitcoin's like the money now, it's going to be, the economy is going to be Bitcoinized, we're going to hyper-Bitcoinize the world or whatever, then in due time, every company that will survive is going to become a Bitcoin company. And that desire to have no business instead of a business, it's like a big business is almost is disadvantaged. You prefer a smaller business if you're going to like as of the time before today. We'll see what happens in the following months. And no business is even better than a small business, but clearly that cannot be sustainable, right? So how does it come to pass that the entire global economy is Bitcoinized and every single company that survives is a Bitcoin company by the nature of them having to use Bitcoin in their accounting because Bitcoin is the money? And right now we have this scenario where it's almost like the smaller the better, and like you were just mentioning that a Bitcoin treasury company is different from a company with a Bitcoin treasury, but clearly there's going to be some point in the future where having more revenue to acquire more Bitcoin is advantageous to being an empty shell. So especially, and everybody here, we have a lot of respect for Jesse because he's been one of the first and proper managerial consultant, educated class analysts for Bitcoin treasury companies. So if you haven't seen his analysis, it was very inspirational even to Michael Saylor. They say, I don't know fully, but people have said that Michael Saylor was heavily influenced by Jesse here. So that's why having you on the stage here is such a pleasure to hear the alpha of where we're going. How do we make even more Bitcoin, please?
Thank you. That's too kind. Yeah, I think you're right that ultimately it matters if you're an operating business, but that's at the end of this S-curve of Bitcoin monetizing and becoming the money for the world. And I think we're at the very early stages of that process. And Bitcoin treasury companies right now are the conduits by which we will accelerate the flow of capital from analog store of value buckets like equities, fixed income, the money market, even real estate, and flow that value into Bitcoin. So Bitcoin treasury companies become the piping for hyper-Bitcoinization, the plumbing for hyper-Bitcoinization. And we've seen that with strategy. They've created these products to go meet capital where it's at. in the fixed income market, in the equities market, in the money market now with Stretch. And they are accelerating the flow of capital from these traditional buckets into Bitcoin. They're pumping capital into Bitcoin. And we're going to see that in every capital market in the world. And that's going to be the story of Bitcoin treasury companies becoming the conduits to help accelerate the flow of capital into Bitcoin. And we're at the very beginning of that process because in the global asset landscape, Bitcoin is currently 0.2% of global asset value. There's $1,000 trillion, a quadrillion dollars of value in the world, and Bitcoin is just 2 trillion of that. And so, Saylor has said that 20 years from now, Bitcoin will grow from where we're at today to $13 million per coin, and it won't be done then. It'll keep monetizing from there. And I think that Bitcoin treasury companies will be a big part of that story over the next 2 decades. So I think the highest and best use of a corporate structure at this point in time is to accumulate Bitcoin in a way that's accretive to shareholders. And eventually it starts to matter if you're generating profits because we've already fully monetized Bitcoin and there's no longer an opportunity to help capital flow into Bitcoin. But until we reach the latter half of that S-curve, the most valuable companies in the world and the most undervalued companies in the world right now, in my opinion, are Bitcoin treasury companies because of the opportunity in front of them.
And so we had what was it called? Oh yeah, Microsoft. You heard of that one. They had a shareholder vote, and it was like 99% voted against even allowing the option of having any Bitcoin on the balance sheet, correct? So let's say like in the future they vote 99% for it. What does capital B, what does the future for capital B and Smarter Web and companies like that look like at that point? What is the end game for them when or even the mid caps, even whatever, I don't know, General Electric or some failing, legacy business like that finds that they need to adopt this strategy for a chance of survival?
You asked a question that is commonly asked questions among investors. And this question is, you have a balance sheet strategy and what will be the next thing and the end game for a Bitcoin treasury company? What is the P&L? In traditional business, a business is made to make money. What is the best form of money? It's Bitcoin. And what is a Bitcoin treasury company doing? It's making more Bitcoin. And so the business of a Bitcoin treasury company is the business of making money. And the best way to make money and to make Bitcoin is literally today to acquire Bitcoin through the capital markets. And so in some ways, during decades, the best way to make money was through a P&L. And today, the balance sheet is the way to make the most money, and the balance sheet is in some way becoming a P&L. It's just that when the business makes money and acquire Bitcoin, accumulates Bitcoin, it's not fitting that well into the traditional markets and the traditional reporting, but that's why we have new metrics for investors to analyze that way that Bitcoin treasury companies are making more Bitcoin, and that is called BTC yield, that is called BTC gain. And BTC gain is just how much Bitcoin have you added to your balance sheet adjusted for dilution. That's literally making money. You are strengthening your balance sheet, and that's the end game for any company. So what is the mean doesn't matter as much as what is the end. And if the end is that you become the company that has the most Bitcoin on your region, and you have a dominance on the issuance of securities that allow you to grow your Bitcoin balance sheet better than other companies, then that's what you should do as a rational player in the market. And look, if Microsoft goes in and buys Bitcoin, that's good for us, because we would have been the first together with Smarter Web and the others to acquire Bitcoin, and they would literally increase potentially the Bitcoin price in fiat. So traditional investors would value the companies that are doing it the best, because it's not only about the size of the balance sheet, it's about the execution, as Jesse mentioned. We are a team of financial engineers in Bitcoin capital markets. We have a shareholder base composed of Adam Back, the only person mentioned in the Bitcoin white paper, and a major financial engineer as well. We have Fulgro Ventures, GTXO Management, Tobam, a major asset manager. And our board is composed of coupled 60 years of capital market experience, banking experience, Bitcoin experience. And in that way, well, you create the best conditions to increase your Bitcoin balance sheet. And that's how you make money. That is the business model. And that is literally the business model of a central bank, is to issue securities and build a major balance sheet. And that's what the Bank of France and the Bank of England have done with gold during centuries, and that's what we are doing. And we are literally the central bank of our own security, that we have the monopoly to issue on our own capital markets, and we have the capacity with Smarter Web to accrue billions and billions of dollars of value of Bitcoin. And at some point, the value of dollars will not matter anymore, and what will matter is the number of Bitcoin on our balance sheet. For us, it's already the case, but there are hundreds of trillions of units of capitals in the world, and those are going to be transferred to Bitcoin, and the Bitcoin treasury companies will be the ones that will then partner with PNL, BTC generating companies that will want to have access to the securities of the Bitcoin treasury companies to get an outsized performance for their own PNL. And so the balance sheet is the PNL actually for a Bitcoin treasury company.
Yeah, I think this comes back to what is the identity of a Bitcoin treasury company, and what does Bitcoin not do for you? It doesn't generate yield, right? There's no way to make more Bitcoin by holding Bitcoin. And so the identity of a Bitcoin treasury company is finding ways to generate Bitcoin yield. And right now and for the next 2 to 4 decades, that's going to be using capital market tools to help facilitate the flow of TradFi capital and trapped pools of capital into Bitcoin and add Bitcoin per share in a very rapid pace that way. And in the process, these businesses are going to become the best capitalized businesses in the world. And we're already seeing that with strategy. And as Bitcoin continues to grow in value, these are going to become the pristine balance sheets of people's dreams. And they will become the Bitcoin banks of the future, I think, in the sense that they will eventually shift from generating yield by arbitraging TradFi capital into Bitcoin. And when we reach that future state of there's no more capital left to flow into Bitcoin because we've saturated all store of value in the world. At that point in time, then it shifts to operating businesses and finding Bitcoin yield by generating profits by becoming the financial institutions, the lenders of the future in decades from now.
4 decades.
Yeah, 2 to 4 decades, I'd say.
Wow.
And so that's the identity of what these Bitcoin treasury companies are. They are in the business of generating Bitcoin yield, growing your Bitcoin ownership over time. That means taking risk. And in the near term, the tremendous opportunity in front of this nascent industry is to help flow capital from the TradFi world into Bitcoin and grow Bitcoin per share.
All right, there it is, guys. The alpha is definitely worth the price of admission, was it not? We heard here that we're in the beginning of a 4-decade-long bull market in Bitcoin treasury companies. And so I don't know about you, but me, I'm max bid. I'm ready to go. I'm a buyer. Get some high IQ stuff here. All right, we're gone. Thank you very much. You're doing great.
Thank you.